Okay, we're going to do a quick webinar here on trading warrants because there's a lot of them have come available to trade with the I guess a resurgence really, because they were hot for a while and then they went away. But the SPACs, special purpose acquisition corporations, and so a SPAC, as we know, maybe we don't, but let me just talk about it briefly, is a special purpose acquisition corporation. They're done at $10 a share. You have to raise a minimum $50 million. You have to do a deal within a year, I think, a year or maybe two, but within a year, let's say. If you don't, then you have to give the $50 million back, or whatever, however much you raised, back to the investors. You have to put in $2 million yourself. You raise another $50 million minimum. Most of them usually put in a couple $100 million. So it's usually hedge funds or big promoters that can put these deals together, and so you can see what happens. I mean, these things just go crazy once once a deal gets done or a deal's about to get done. There's a myriad of them on here today. STPK, LAZR, CIIC, LGVW, which we're going to swing on. I mean, you just can go on and on. JWN, it's a brand new one. No, it's not. That's not the one I want. I was thinking JWS. Popping out here. So when they do these, let's just use SPK as an example. This has three vehicles that are trading. STPKU, which is the units, STPK, which is the stock, and STPK is the warrants. The unit, if you buy the unit, you get the stock and the warrant together, that you can split the warrant off later. Now, this is SPTK, Star Peak Energy. So you just go to sec.gov. This is the SEC website. Click on Filings, Edgar Search, Company Filings, symbol STPK. Now we're looking for the registration statement. So we see that the prospectus here, this is the amended one, and that's the one I was just looking at. So that's a good place to start. Or here, the prospectus here, 42. And we click on it, this one here, and up comes Star Peak Transition Corp. 35 million units. They raised $350 million at $10 a unit. So, and we see that the owner of the unit is entitled to, let's have a look here. I'm just looking for where the warrants are. So the warrants of securities, price things have one. Okay, here we are. One class and 1/3 warrant. Each warrant entitles the holder to purchase one share at $11.50 per share. So he takes 3 warrants to buy the stock at $11.50 per share. So we see that the warrants are trading at 4, and the stock is trading at, so these warrants are way overvalued right now, and so they're probably a good short, because STPK at $15 has a, let's call it $15.50 because it's a nice round number, at $11.50 has $4 of intrinsic value to it. But it takes 3 warrants to buy 1 share, so that's $12. So for $4 intrinsic value, you're overpaying for the warrants by $8 a share. But you see that they all trade in the same, they all look the same, they all trade the same. Here, STPK is the units, give you the right to buy the stock, the warrants. So you get the warrant. It takes 3 warrants to buy the stock at $11.50. So that's a $4 premium. It would be 15 and then $1.50 per warrant. So the warrants, the units and the stock are trading pari passu. The warrants are way out of whack, but there's very few warrants. So so it's like buying options. Warrants give you the right to buy the stock. 3 warrants gives you the right to buy the stock at $11.50. So these, you can see these warrants are way overvalued, but if it's highly leveraged, if the stock goes to, if the stock moves to 30, the warrants are going to go to 10 or 15. So you might double here, but you'll get 4 or 5 times your money by owning the warrants. But you can see that they're overpriced right now. So I wouldn't be a warrant buyer, other than the fact that they do move with the stock, but not as much. I mean, this stock is up $5.30 today. I guess so. The warrants are up $2.70, and the units are up 6. So you look at what the price of you look at the prospectus and you see whether the warrants are a good deal or not, or how much out of the money they're trading. And in this case, they're a lot. I didn't look up any others, but we could if we wanted to. Let's see, the CIIC has warrants. No, CIIC. Here you are. They have a warrant. The stock CICC is trading at $26.79, and these warrants are trading at 6. They just popped from $1 to 6 when the CICC popped from 10 to 35. So you'd have to go back and look and see what the warrants on CCI are trading at. And if you're just day trading it, it's not so critical. If you're paying too much for the warrants, because you're just going to day trade it and you're looking to get the leverage on the movement of the price of the stock. But over time, as you get closer and closer to expiration date, the intrinsic value, the time value is going to deteriorate just like they do on stock options, and the price won't move as much as the stock does. But they're leveraged, they're lower price, you can buy more of them, and they'll trade they'll trade in conjunction with the stock. But you can see this one hasn't had much range today, between 6 and 675. So say call it 12%. And CIIC has traded from $4, so about 20%. Not quite. Yeah, about 20. Let's call it 20%. Not quite 20, 18%. So the bigger move is in the CIIC, but you can own more because it's less expensive to buy. You could own more of the CIIG and so get more bang for your buck by owning the warrants and trading them rather than trading the stock.